not mistaken, you say it's about 113% a year. Is that right?
Yeah, I'm just going to look at my Bloomberg screen to see what the volatility of Amazon is, and that'll give us an idea of what a large adopted network, which is in an exponential or logarithmic trend. So Bitcoin is roughly about 75% volatility. So it's a very volatile asset. Let's have a look. So I'm not sure what, I can't find it yet, but what we'll find is that over time, volatility falls as more people are in the network, because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, I mean, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, you know, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. But it should remain in a logarithmic trend. Well, 1 billion people, bizarrely, because of the compounding numbers, if it's growing 113% a year, you get there by 2024.
Wow.
Be alive.
Just use the adoption curve, assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people, that's 100% growth, than from 2 to 4. So just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. And so you're at 3 billion, 3.5 billion by 2030. Well, and also look at the holders of crypto. They're not the traditional holders of equities.
Yeah.
So here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility because the volatility gives returns, risk reward. Well, the equity market gives less of that. So it's a whole change in risk appetite for the population. I mean, I think, look, it's an important factor that because this is borderless, you can be in Brazil and participate in Manchester United's economy. Right before that was impossible to do. What, you had to go and open a brokerage account in the UK to buy shares in Man United. What are you getting for that? It's not the same thing, right? So this is a big playing field leveler, i.e. it allows all sorts of people an opportunity. And because tokens can be fractionalized, you can all put in 5% of your net worth, whatever that is. So that helps adjust for the fact that, you know, let's say you're in Turkey now, your currency is collapsing, but you can still think of it in the right terms. Also, because these things are priced in different currencies, it gives people the opportunity to avoid devaluation of their own currencies. So you know, you're living and breathing the fact that people understand the culture you're trying to build and the message they want to be involved and they want to own your token. And then they go out and help you also spread the word. And guess what? The token value goes up. So now you've created an asset for people that did not exist by just being part of a movement. They haven't got a job. They're not working for you. They've got no employment contract, but they've got an asset that's going up. I mean, that's genius. So yes and no. Yes, because of the things we've talked about it basically opens up wealth creation opportunities on an equal playing field. In the metaverse, nobody cares if you're black, white, female, male, if you're in Africa, South America, or Europe. Nobody cares because it's a different world. So it changes the dynamic for many people. It opens up opportunities for many people. But what we're doing here is we're creating digital sovereign states, essentially. Because if you think about it, we've got many of these, even the bankless DAO has an organizing set of principles. You have kind of a set of rules, a mission, and you've now got a system of money. You've basically created a state. Now, what's interesting is tokenization is a supercharging of behavioral incentives. This is why it's spreading so fast. And behavioral incentives can be used for great means or bad means. So, you know, the purpose of what you're doing is to spread the word and communicate this whole new revolution. But somebody else can set up a DAO with a token that has completely the opposite. So, and it's going to be very powerful. It's basically what social media did, was split people into different buckets. My guess is, generally speaking, communities want to do good. It's actually quite difficult to organize a community that wants to be evil. And so I think with this more distributed nature of the membership of these large communities, it will tend to err towards the good side than the negative side, but not always.